GM, welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. Don't get caught in the hype cycle. I'm Jay Bird, joined by my co-host Kyle Reedhead, and we believe that Solana is going to change the world. That's why we're carving a path for doers to confidently build and invest in Web3.
You just pissed off a lot of maxis in this space. The OGs are not happy with you right now, but Solana NFTs are ripping. It's airdrop season in Solana. That ecosystem is just going off. We're going to cover a bunch of what's happening there. But first, we'll talk about the a16z State of Crypto report. We did a whole podcast on it last year. This year, we're just going to review a few slides. Ronaldo is being sued for $1 billion for being involved in Binance. Obviously, we'll talk about that and what's going on there. We'll do a bit of a market watch, but it's going to be shorter because during the market watch, I'm actually going to announce a whole new piece of podcast content that we are coming out with that we hope you are all going to like, but please let us know in the comments if you're on YouTube and in the questionnaire if you're on Spotify. We're going to talk a little bit about Magic Eden and some cross-chain wallet that they're launching, some Bankless DAO and Bankless drama, and so much more. It's going to be a great episode. So let's do it.
Let's do it. I'm stoked. Before we jump in, let's just take a minute, take a deep breath, share some gratitude. Kai, what are you grateful for today?
I am grateful for a new tattoo that I've got. I got it yesterday, I guess 2 days ago on Tuesday, and it is right here on my bicep. It's still a little bit tender and red, but it says, "Keep smiling, blue eyes," which is the quote that's on my sister's gravestone. I've been wanting a tattoo for her, like in memory of her, for 20 years now, and I could not figure out what to do. And finally it came to me and I was like, I'm just going to go do that. This is perfect. And so I got it done and I'm super pumped.
Nice. I love that, bro.
Thank you.
I'm
what are you grateful
for Canadian medical system. My dad had a heart attack this summer, and yesterday he had to go in for heart surgery. He had a quint bypass, 5 veins bypass. Yeah, which is serious. It's the most that they'll do. And he's now in recovery, going to see him later today. So very grateful to all the doctors and all the medical professionals that are able to help him out with his heart and hopefully get him back on his feet and back to full health soon.
Well, it's great to hear your dad is okay, but wow, 5, that's wild.
Yeah, it's no joke. All right, before we jump into Market Watch, a quick, very exciting announcement. Next Tuesday, December 5th at 12 p.m. Eastern, we are having an event in our Discord that is open to everybody. This is our Eyes on Chain event. In the past, this has only been open to pro members, but we really want to make sure that you are ready for this coming bull market, or the bull market that we're already in, but there is a lot more to come. We are so early. So this event is going to be the 5 tips that we have for you as an investor to take advantage of the coming bull market. Everything you need to know to make sure you're prepped and prepared. So you're going to want to be at this event. If you're not in our Discord already, link is in the show notes to join our Discord, and we will see you there Tuesday, December 5th. 12 p.m. Eastern.
See you there, guys. Can't wait for this one. All right, before we get into the Market Watch, let's take a quick second to hear from our sponsors.
Modern newsletters are built on Paragraph. That's right. Paragraph is a brand new newsletter platform that combines the best parts of Web 2 and Web 3 to supercharge newsletters for both writers and readers. Build a community, not just an audience. Paragraph uses blockchain tech to allow readers to collect and own the words that matter to them. This takes reading a newsletter to the next level. With Paragraph, readers can mint, collect, and show off quotes from their favorite newsletters. This opens new possibilities like creators sharing revenue with fans. I also love their new feature, Paragraph AI. This integrates GPT-4 natively in Paragraph to create, edit, and improve your writing effortlessly with one click. And guess what? We at Web3 Academy are on board and have already moved our content over to Paragraph. We believe this is the future of newsletters because of the profound engagement it creates between creators and fans. So, whether you're a creator, writer, or an avid reader, it's time to check out Paragraph and capitalize on the opportunity of being early. Welcome back. All right, Kai, as we've been doing for the past few months, let's start off with a look at what's going on in the markets this past week.
Yeah, so been a choppy, kind of slow week in markets this past week. Up on the screen here, I've got the price charts for Bitcoin, ETH, and Sol. Bitcoin down 0.86% this week, today. And on the week, it's up 0.29%. So not much going on there, just kind of choppy. ETH, same thing. It's up 0.3%, but down 1.36 on the week. So really not much going on there. And Solana, same thing, down 0.03% on the day and up almost 3% on the week, as Solana typically does. But overall, I mean, not much happening in markets to be expected. I think a couple weeks ago, I went over kind of the ups and downs that happen. We've had an unbelievable march upwards, especially in Solana, which is up, 178% in the last 6 months, 70% in the last month. Sometimes we got to take a breather. We've got to relax, figure out, do we want to go up a lot more? Do we want to just chill out? Or was this a fake out and we're actually going to go back down? I think right now we're just taking a breather, which is needed. And soon, I think we will move upwards. There's been a lot of talk around the ETFs. The SEC is still working with a lot of the companies, having meetings, ongoing meetings. They're continuing to refile, which is all like really, really good. It shows they're making progress. So we still have a 90% chance of these ETFs getting approved by January 10th, I believe is the date. And so obviously that's what we're kind of all waiting for still. Now, all that said, one thing that did happen over this last week is Coinbase. Coinbase has had just an absolute mega week, reaching up to $128. I think it was yesterday. It started to come back down a little bit today, which is, once again, needed and necessary. But it has had just a mega last couple of weeks. Coinbase, we had talked about a little bit. We actually had been writing a pro report that wasn't supposed to come out until mid-December, but we were just kind of planning it ahead of time. And Coinbase ripped so hard that we're like, we need to get this thing out ASAP. So it went out today, on Thursday, to all of our pro members, breaking down the economics of Coinbase, some of the technical analysis stuff, and just trying to look at, like, is Coinbase a good investment? We had put in the pro report back in, I think it was July, that Coinbase is a great investment and it was under $60. I thankfully and luckily bought the very bottom almost at $37 earlier this year. And now we're sitting at $122. But this is a really good sign. People don't really get Coinbase in the TradFi world. And I think it's one of the most important companies there is. If you're a pro member, make sure you read that report. If you're not, go check that out. Go become a pro member because it's really, really good. But Coinbase is sending a signal, just say, hey, this industry is not dead. We are back. And Coinbase is a legit, company. There's Binance, there's all these other ones that are having their struggles, but Coinbase is here to stay. And they have a chart pattern here that I have up on the screen, which is what's called an inverse head and shoulders. You think of it like head and shoulders. If this was flipped the other way, you would have the middle here, which is like your head. And then you have the shoulders here on the sides. And then that blue line you have is like the neckline, you would call that. And typically this is like a very either bullish if it's inverse and then bearish if it's, if it's normal. But since this is an inverse head and shoulders that's been going on since May of 2022. So like a year and a half long chart pattern. These generally mean big moves. And Coinbase just broke out. Now it looks like it's coming back down. It's probably going to hit this line. And then I would bet it takes off. There is no resistance on Coinbase until $200. The head and shoulders, if you measure the line, also goes up to about $200. So like there's a lot of things pointing to Coinbase is about to explode, even though it already has kind of exploded. But just wanted to highlight that because I think this is really good news for the space to see Coinbase doing well. We can't have another exchange go down or do bad. So a lot of bullish things going on in the Coinbase world. And then if we just flip over to macro real quick, and then I'll wrap up here on Market Watch. The Dixie was doing everything we wanted. Dixie is the US dollar. I've been talking about it every week. It basically goes down about $1, which is really nice, or 1 point. And it was down to 102.5, which is really nice the last 2 days. And just before we jumped on this podcast recording here, it spiked up to 103.3. Doesn't really matter. It doesn't go straight down. Just like when crypto goes up, it doesn't go straight up. This is all normal. I expect the trend to continue downwards. Again, when this goes down, it means it's a good chance that risk assets are going to go up. As you can see, the dollar spiked today, right? Hugely. And so if we look on the side here, most of our assets, they're in the red, right? It's very, very, very correlated. So that's probably the main reason why you're seeing the Nasdaq down, a lot of tech stocks down, crypto down a little bit. Nothing's down big, so it's not like a big thing, like no one really cares. But if you're trying to figure out what happened, why are we in the red, that's likely your answer. The final thing to note here is this. This is just a beautiful, beautiful chart. This is the liquidity chart. Now, what this chart is showing is the rate of change in liquidity across the biggest nations in the world. So we have the Fed, we have the Bank of China, we have the Bank of Japan, we have the European Bank, and we have the Bank of England, okay? And basically, we're looking at the rate of change of its liquidity, meaning how much money they're printing or not printing and actually removing out of the system in over time. And we see, obviously, we had that massive stimulus and money printing from COVID. That went down at basically the end of 2021, which marked the top of crypto and tech stocks as well. And it's just been down for the last 2 years almost. Now, in October of 2022 is when it sort of flipped and started to go upwards. Still the negative, meaning we're not printing a ton of money, but we are printing less and less, not printing, having high interest rates and like basically getting money out of the system. We're doing less and less of that quantitative tightening. And we're just about at the point now where we are going net positive in terms of actually quantitative easing and printing money. So if you look here, you can see the Bank of Japan is already in positive for printing money. And you can see that the Fed is already there. So the US, it's still Europe is lagging a little bit and some others, but this is likely to just go completely up. Now, why does this matter? Look at this chart right here. So this is your chart of liquidity. Here is the chart of the last couple of years of Fed liquidity with Ethereum. Look at that. It's almost identical. It is literally identical since 2021, since the top. If you just followed liquidity, you would know the, not exact prices, but you would know pretty much the exact prices of Ethereum. This is very close with Bitcoin as well and others. You can just tell how correlated liquidity coming into our world, not just the US, but our world is with Ethereum. And so I'm going to do a couple pro reports in the coming, month or two, as well as a bunch of other things. So again, I just think this is the key thing that we're looking at. And this is why macro matters so much. When you're looking at things like inflation and unemployment and the dollar, really what we're trying to figure out here is liquidity, because liquidity is what tells us if assets are going to go up and down. So that's that. Now, I know I do my best to explain this stuff, this market watch stuff in the beginning of our roll-ups every week, but I don't have a lot of time because we got a lot of news to go over and we're getting more and more news every week, which is great. This is really good for the Web3 space, the crypto world. The problem is I don't have enough to really go in and explain what this all means and how you should action it. I do my best in pro reports to go really in depth, but I only get about 15 minutes and then Jay gets mad at me when I talk markets here in the roll-up. And so what we've decided is we are going to launch a brand new episode in the Web3 Academy podcast. The name we still don't know exactly, but it's going to be called Market Watch for now until we figure out another name. If you guys got any ideas, please let us know. We thought maybe Market Pulse. Jay didn't like that one. I was okay with it. Anyway, this new episode it'll actually be on Wednesdays. The doer is going to move to Tuesdays. So the doer will be the same as always. We're looking to find all the best applications being built in this space. We want to talk to the founders and understand, why on-chain. That's going to remain. That'll be on Tuesdays. On Wednesday on the podcast, we'll now have Market Watch, which is going to be breaking down what's happening in markets. Where should we be putting our investments? It'll be technical analysis. It'll be macro analysis. It'll be breaking down specific assets, tokenomics, etc. It's going to be a lot of fun stuff. Very timely. So it's supposed to be what's happening that week. And it'll be mainly me, although probably starting the new year, I'll start to bring on other analysts as well and interview them. So this will be your sort of pulse on what's happening in the markets on Wednesdays. And then Tuesday will be your pulse on like what's happening in terms of building and innovation. Jay will be leading those. I will be leading Market Watch. The roll-up will remain the same on Fridays as per usual. And yeah, I think that's about it. Hopefully this is something you guys want. We have been asking a lot over the last few weeks and it sounds like you guys want more Market Watch stuff. So again, let me know if this is something that you guys want. You can put it in the comments on YouTube or on Spotify. You can comment in there and let us know if this is something that you're excited for.
I'm excited. I'm very excited. We're at the time right now where there's a lot happening. There's a lot of FOMO. There's a lot of narratives of different people trying to grab your attention. Crypto's an attention game and you got to know what to pay attention to and what not to pay attention to. And it's tough, very difficult at this time. And it's only going to get more difficult as the bull market continues and all these charts that Kai just showed us are trending in the direction of it being harder and harder to stay on top of your investments. And so, yeah, having a show that is dedicated towards that, I'll be your number one fan, Kai.
Thanks, Jay. Appreciate that. Right behind my mom.
What's up, Snoop? Shout out.
And again, make sure you attend the event on Tuesday, because that's going to set a good foundation for the rest of these shows that are going to come out every week. But I think those tips are going to give you a good foundation and framework. And then from there, every week I'm going to be diving into topics that are going to help you navigate this cycle. So should be a good time.
Amazing. Well, with that, let's shift into the news of the week. First up, a16z or a16z, depending upon whether you're Canadian or American, how you say it, released a short version, an abridged version of their State of Crypto report. They've done this a few times over the past few years, and they decided to do a spotlight on policy, which I think is very important. A16 is obviously in the US. Most of their investments are within the US, so they recognize the need to help guide policymakers. They actually said, they had a great sort of opening line here, said the internet is one of the most important innovations and engines of progress in human history, yet it is failing the people who rely on it most: consumers, creators, developers, and small businesses. Control over decisions, data, and more is consolidated among a handful of big platforms, which unilaterally make decisions on behalf of users, change the rules suddenly on builders, extract prohibitive fees from creators, exercise outsized control over consumer data, and more. These are all the problems that we've talked about in the space, but A16Z wants to help people understand these problems and policymakers understand so that they can make smarter decisions. So we're not going to go through this whole report. You can go check it out if you want on their website. It's a long slideshow, but we're just going to bring up a few things. So if you don't have the time to read the full report, we'll let you know what you need to know. First, just want to talk about a couple of crypto myths that they talk about in this report. One is that crypto is only used by criminals. If you're talking to your uncle or your aunt over the holidays and they're busting your balls about crypto and how it's only used by criminals, well, they're wrong. Only 0.24% of crypto transactions have been used for illicit purposes in the last year. Now, is that an exact stat? Probably not. Difficult to know exactly, but directionally, it very clearly shows that this industry is not used by criminals. So let's drop that myth. Second, crypto is bad for the environment. There's another common thing people love to say, oh, crypto's so bad for the environment. But you know what? They're wrong. Now, Bitcoin, sure, Bitcoin still has some work to do in order to improve their impact on the environment, but they're far from being the worst impact on the environment. I've got a chart up here on screen that estimates the annual energy consumption by product and industry, and the banking system is by far the largest annual energy consumer, and it is 92,000 times an energy consumer what Ethereum is. Gold mining is 50,000 times. Google, 7,300 times. Netflix, 176 times. So Ethereum is really not bad for the environment. Let's all make sure we squash that myth. It's good. Bitcoin, yes, that still has some work to do, but
yeah, not since we moved to proof of stake. But I think the key thing to highlight here is like the banking system isn't progressing renewable energy, whereas that's what Bitcoin is really doing. Bitcoin may use a lot of energy, but over 50% of it now, that energy that they're using is actually renewable energy. So it's not bad at all for the world. Whereas I don't think the banking system is that, or I don't think gold mining is that by any means. I don't think there's any gold miners out there that are like using EVs or using wind technology or whatever. Whereas Bitcoin has, created this innovation cycle basically for the renewable space, where wherever there's leaking energy from mines, from oil rigs, from like wherever, volcanoes, they go and you set up mining rigs there, and then it's free energy. And it's incentivized to that because it's the only way to make this stuff profitable. So the more renewables they can find to power their Bitcoin miners, the more profit they make, right? And so it makes complete sense. And so the industry is quickly going that way, which I think is really good. And it's innovating for other industries as well. So it's doing actually a lot of good for the energy space. And I think people just can't wrap their heads around that, because when you look at this chart that you have up there, Jay, it's a big number, right? Yeah. It's a massive number. It's right behind banking system and global data centers, but there's more behind the curtains.
Now, you make a good point that there's two main takeaways here. One is the proof of work blockchains are all innovating and trying to figure out and trending in the direction of figuring out how to reduce their energy consumption. And then at the same time, most new blockchains and most existing blockchains that are being used in big ways are proof of stake now. So they're all using much less energy.
Just use it in a laptop. Well, in Ethereum's case.
Let's keep moving through this report. So some other things that are worth mentioning here. One is that there are over 40 million Americans that own crypto, and that's growing. So I would say that's about somewhere between 16 to 20% of Americans that own crypto. So that's still a very small number. Like, let's just recognize that for a second. Only 16 to 20% of Americans own crypto. That means that there is a huge opportunity for more Americans to come into the space. Now, obviously, no surprise, the regulations in the US and the fear around all the possible regulations have led not a lot of new entrants to come into the space. But at the same time, what we also see is, despite the fact that we've been going through this bear market and the total crypto market cap has gone down immensely from its highs, we still see an increase in the use of blockchain. So I've got a chart up here which shows that every year for the past 4 years from 2020, we are double-digit % growth every year in the number of active blockchain users. So even through the bear market, when liquidity went down, when crypto market cap went down, we still had more active users.
When companies blew up, literally still continue to go up. Now, just looking at these numbers for those that can't see, in 2020, we had a growth of 135%. In 2021, 108%. Then in 2022, which is when everything blew up, 20% growth still. 2023, the year after everything blew up, where prices still didn't go up well, up 14%. That is actually unbelievable. And the first time that's ever happened in a bear market. You can even see on the chart, the last bear market, we went down. We went down big. We continued to grow. Think about what's about to happen if we go into this bull cycle that we believe we're about to go into in terms of 2024, 2025. This growth is going to be just unbelievable. And I think, just to add to your point above where you said, 40 million or so, it was 20 to 40 million Americans. Most of them are not actually using this stuff. They just happen to invest mainly in 2020, 2021, because they were all getting a bunch of money from the government. But what's interesting is a lot of this growth is just coming from other parts of the world where crypto actually has product market fit and is needed. Most Americans don't need crypto. They're just speculating on it. But in South America and Africa and Asia, these people need crypto. Russia, etc. Like, these people need it. And that is the most bullish thing for me.
Okay, next up, and it's a great point, Kai. They talked about stablecoins, and we've talked a lot about stablecoins being the killer crypto app. Now, here's a chart that's just amazing to see, is the total market cap of stablecoins, 99% are USD stablecoins. Only 1%. How lucky is America that they are currently fighting against crypto, not providing clear regulation, and at the same time, they're being saved. They're being saved. They don't even realize how lucky they are. Their currency is now being purchased by all these major stablecoin players and being held in reserve funds, which just further backs their currency as the global monetary M1.
It's global reserve currency. Yeah, that's so fun. And the whole idea of crypto in the first place was, let's replace fiat, and instead we'll use Bitcoin as the new currency, which doesn't make a lot of sense, at least in the short term. And it ends up that what crypto is really doing is making US just more usable around the world, which is it's an amazing innovation for many people. And it's funny that the American regulators can't wrap their heads around how big that is for them. That just shows we're early, guys.
Yeah, we're very early. So look, lots of bullish things coming out of this report. I think it very much ties into what Kai said earlier around the excitement around Coinbase. Is, even though the US continues to make roadblocks for builders, they are seeing great growth there. And then around the world, we're seeing growth as well. And that's through a bear market. So we are very well positioned as we launch into this next phase of the coming bull run. Okay, let's shift gears to what I mentioned at the beginning of the episode, which is Solana is absolutely ripping right now. And I don't just mean Solana, the token, I mean the entire ecosystem. In particularly, NFTs on Solana are going nuts right now. Now, let's be clear. There's Solana, the token is up, I think 70% in the last month. It's up over 150% in the last 6 months. So there is a lot of new money coming into the Solana ecosystem. A lot of people who hold Solana all of a sudden feel rich. They feel like they have a lot of money. Well, what happens when your money doubles, triples, basically overnight in the matter of a few months? You start to buy luxury goods. You're like, I got some cash to spend. Okay, well, where are you going to spend it? What's the most luxury good on a blockchain? NFTs, right? So Solana NFTs are just going nuts. We're seeing across all, I mean, I can list off so many of them, but Mad Lads, which is one of the biggest ones, Claynosaurus, which is another really big one, OK Bears, Famous Fox Federation, all of these are up multiples. Like Mad Lads is up 66% just in the last week alone. OK Bears is up 106% in the last week alone. So why is this happening? Well, it's happening because of inflows. And one of the interesting things, and if I pull up a chart here, I'm going to show you this, Kai. This is really going to blow your mind, is there is a lot of inflows coming from across other chains. People are excited about Solana right now, and they're moving their money from ETH over to Solana. Just in the last week, the Mayan bridge saw $1 million in inflows from ETH. Sorry, it saw $1 million in one day, $4 million in the last week. Another bridge on Phantom Wallet. So Phantom just released a cross-chain bridge in their wallet. Since they released that on November 20th, so that's only less than 2 weeks ago, they've seen over 1 million ETH bridged over to Solana.
I bridged some ETH over on that. I wanted to test it out.
There you go. Did you do that because you're hoping for an airdrop in the future?
You never know. I like to just try things, but it worked really well. I was very impressed.
So look, what we're seeing here is we're seeing a lot of, not only are we seeing the Solana price increase, we're also seeing a lot of liquidity moving over to Solana. And those two factors at the same time are going to have an impact across the entire ecosystem.
So for a bit of context as to why the NFT ecosystem in Solana is going up so much. I know if you were around in 2020, 2021, we already learned that, hey, NFTs rip, and then it didn't really work out. We thought this thing was really cool and everyone loved these things, and then they all just went to zero basically. So why the heck are we doing it all over again? And the simplest answer to this is compare a blockchain really to any ecosystem of any country or nation state, right? If you have a country that's maybe they were communist for a long time, or they're very closed, and all of a sudden they open up to the world, or they find something new, like a new, they find oil or something, and all of a sudden the nation gets rich. What does everyone do? Well, everyone gets jobs, everyone's making a bunch of money, and so they start to buy nice clothes. They get nice brands from other places. They, buy Rolex watches, they buy nice cars, and they want to show off a little bit. They want to prove their reputation. The same is true on internet blockchains. It's the same thing as a nation state, right? And so there's people who love Solana, and they made a lot of money as Solana. Just like if you were, I don't know, whatever country, you made a lot of money in that country. And so what do you do when you have a lot of money now and your country is rich? You go and you buy things to show off who you are in that community, in that nation state, right? And so one way to show off who you are is PFPs, right? And so PFPs, although they went down a lot of last years, it's not that they're gone. They're going to come back for Ethereum too, because that shows identity and reputation, and that you were earlier, that who you are and who you represent in that ecosystem. And so the same thing is happening now in Solana. Everyone's like, okay, I got all this money, finally, we're back. Solana's here. I got to go now stamp who my reputation is, who I want to show on Twitter, to show off people hey, I'm in Solana. I've been in Solana. And so now I have a Mad Lads, right? And so this is what people do when all of a sudden they make money in a community that they're part of. And so I would expect this to continue. I'm not saying every NFT project is going to continue to go up, but I think we'll see a very similar bull market in the Solana ecosystem as we saw in Ethereum in 2021. I think it's going to be very, very similar. People are like, oh no, everyone will learn from that. But you got to understand, a lot of people in Solana, they weren't here in Ethereum in 2021. Mm-hmm. This is new for them. And so the exact same thing happens. It's very interesting how this stuff plays out, but that's just how it works.
Well, and the other thing to mention is that crypto and NFTs is very much, it's an attention game. It's a narrative game, right? We saw this most recently with Friendtech and SocialFi. All the attention in August, September was all on Friendtech. So all the liquidity flowed that way. Have you looked at the Friend.Tech chart recently? You know what? There's not a lot of liquidity there anymore. People are moving out. And have you heard about it? No, nobody's talking about Friend.Tech anymore. What's everyone talking about now? Solana. Where's all the liquidity moving? Solana.
I guess it actually could be, I said it's people from Solana who aren't in it actually could be a lot of Ethereum people, although I don't think there's a lot of mix over, but it could be a lot of Ethereum NFT people that have now moved over going, oh, here's where the liquidity is. I'm going to go buy those NFTs and then boom.
I think it
could do that too.
Especially because there's no, if you're an ETH NFT investor or trader, there's no new traders in NFTs right now. Nobody new is, there's no new buyers of NFTs, right? Unless you're talking about in the Solana ecosystem, maybe there's some. But there's not a lot of new entrants in the space. So you got to go wherever the attention is. And that's where the attention is right now. And yeah, I think you're right. I think this is just the beginning, Kai, for Solana NFTs. I think they're going to have a good rip for during the next bull run.
Yeah. And by the way, guys, this isn't just going to rip for forever. This reminds me a lot of 2019. Binance had its own mini bull market in the middle of the bear market. So Binance launched this like launch pad. And they had their BNB token that had recently launched. And when they launched this launchpad, it allowed a bunch of people to launch tokens and apps. And BNB went up like 5x in a matter of like a couple of weeks in the middle of the 2019 bear market. It was crazy. And then all these tokens like went nuts. And it's very, very similar to what happened here. Like Sol being up 500% is not normal for the stage of the bull market we're at right now, but it's doing that in its ecosystem, same thing. It's very similar to the mini bull market that Binance had back in 2019. So quite interesting. I think the other reason why this is happening is, well, it's actually the same reason, but added to it. It's not just that Solana has gone up, but we've got a bunch of airdrops coming in Solana. So we have the Solana Airdrop season where some of the there hasn't been a lot of tokens in Solana previously, part because most of the teams in Solana are actually in the US. And I think it just wasn't there. Ethereum did that. They made all the mistakes and Solana's been able to like kind of learn from it, which is smart. But also they didn't have a ton of users. So like doing an airdrop to a few thousand people, that doesn't make a ton of sense. Now we've got a bunch of activity on Solana. And so what's happening is the big applications are now beginning to launch tokens to for governance. So they want to start to decentralize. And I think they just want to start incentivizing more people to come and use Solana. Obviously, it's a great marketing tool. We've seen that over the years. And so what's happened is Pyth, which is the first one. This is basically the chain link of Solana is the easiest way to think of it. It's oracles. And so it's the chain link of Solana. They have just launched an airdrop earlier this month. And I think the market cap of Pyth already is, let me just find it here, over 600 million or close to 600 million. So like, that's pretty big, right? And so that's a lot of liquidity that is now on the Solana ecosystem. They could sell those into Sol. They could sell those into NFTs, so on and so forth. So there's a bunch of new liquidity that literally printed and came out of nowhere. That's a big deal. You can think of these airdrops like the checks that we got from the government in COVID, right? It's just free money is what people are getting out of nowhere, just random users. The other ones that we have is Jupiter and Jito. So Jupiter is like kind of like the Uniswap, I guess, of Solana. It's just a massive DAX exchange, has some more stuff to it. It's an aggregator and more. But it's pretty big. It's really good UX. People always say it's really good UX. It's the same UX as Uniswap. There is really no difference, except for it's on Solana, which is faster and cheaper. So like in that sense, it's better UX, but like the app itself looks identical to Uniswap. And I hate when people keep saying it's so much better UX. It's like, guys, it's the same fucking app. Anyway, they are launching an airdrop. It hasn't gone live yet from what I saw, but you can't farm it anymore. The snapshot was on November 2nd, but there's 1 billion Jupe tokens that are about to go. So again, this is probably going to be, think of Uniswap as over 5 billion at this point. I don't know how big Jupiter will be, but some sort of market share towards that. So let's say hundreds of millions of dollars now coming to the Solana ecosystem on that. And then the last one, which is launching in the next week or so, is Jito, which this is your staking token. So the same as like Lido in the Ethereum ecosystem. This one, they just did the snapshot on November, I think it was maybe the 17th or 22nd or something like that. It was last week. So again, you can't farm this one either, but I would expect this to be a big one. It's going to a lot of wallets. And again, this one is growing. They're becoming really big in the Solana world. And so this is going to inject hundreds of millions of dollars in the Solana ecosystem. So I think NFTs are going to be a big beneficiary of this. And maybe the Sol token, maybe a bunch of people just sell it in a Sol, not sure. That's typically what happened in the ETH world in the last cycle. So I would assume that happens here, but let's see what sort of incentives they make to hold the tokens. Maybe there's, you can stake them or whatever so people don't sell. We'll have to see. So this is just 3 big ones. There's going to be so many more. This feels like a lot, having 3 in the last month. This is nothing. Ethereum in the last cycle, it was like they had airdrops every week. And Solana, there's a lot of apps that are now coming out. Now, they don't have a ton of use just yet across all these apps, but I think it's going to grow, especially from these. So if you have not gone and bridged over to Solana and played around with some stuff, go do it because you will get airdrops. I made tens of thousands of dollars on this in the last cycle from Ethereum tokens. I miss Jupiter. I miss Pyth. I think I get Jito because I've used it and I staked my soul using it before the snapshot. So I probably will get some there. What other apps? I'm not sure. We might do a report on this in the coming day or coming weeks, but otherwise just go play around. Play around with whatever you can.
Just stimulus checks, eh? Just
stimmies all day in the salon.
You get some money. You get some money. You get some money.
When I first got my first airdrop, I was like, what just happened? It was like thousands of dollars and I was still fairly, and I was like, pardon? Like, what's going on here? This is sick.
It's just a wild feeling. Okay, let's go to inscriptions on Solana. What's on here, Kai? I don't know if a lot of people are following this story, if they're aware of this, but it's interesting and something that we should dive into.
Yeah, so inscriptions are, I don't know, in my opinion, probably not the most exciting thing in the world, but there's just a lot of action going on, and so I want to explain. Inscriptions are what happened to Bitcoin with ordinals, right? These were inscriptions where basically you take instead of, launching an NFT where the token is the only thing on the blockchain, but the image itself is not, inscriptions is where you actually put that image into the blockchain itself, right? There is less functionality to it. It's not in a smart contract. It's just like literally in a block. So it's not the same as like, I can't go and create it. You lose a bunch of utility when you inscribe something rather than mint it as an NFT, as a big differentiator in a simplified way, just so you guys understand. But anyway, this happened on Bitcoin. It became a big thing. To me, it's this sort of like fun thing that a bunch of Bitcoiners are doing and whoever else, probably ETH people moving over there. They're playing around with it, but like, in the future, it doesn't make sense. It is a slower way. It is a more data consuming way. Like it doesn't really make a lot of sense. It's helped in terms of like creating more fees on Bitcoin, which is great for the security, but like ultimately you lose a bunch of utility. So like long-term, it probably doesn't make a lot of sense for most things to use this. For some art where you just like, hey, I made this thing and I want it to exist forever. I don't really care about any utility. Maybe I don't even care about selling it. Sure. And inscribe it to the blockchain. That's great. It's just there forever. It's kind of like when people like write their name on a bench, right? Like K plus J equals heart or whatever, that's me and you, Jay. It's like that. It's just like there for forever. So like cool, but like limited utility of what that means. But anyway, all of a sudden this is now happening on other blockchains. Polygon reached like all-time highs of transactions by like a long shot just a couple weeks ago. And it was because of this thing called polls, which is essentially just inscriptions, but over on Polygon. Then all of a sudden this is happening now on Solana. They have this thing called souls. It's ridiculous that every blockchain, every ecosystem just kind of copies the same thing. But I think it's happened on Avalanche. Over these last few weeks, you're seeing unbelievable transactions and everyone's hyping it up. It's not real, like sustainable transactions. I don't think these things stick around. It's more just hype. But I think the interesting thing from this is Solana can handle all this. So Bitcoin, the fees went nuts. Polygon handled it, but it did have a bit of a spike. Solana has no spike. It's just things just chug along as normal, even though there's like millions of these things being inscribed into the chain. So it's a good stress test for the Solana ecosystem. But like, if you want to degen it, go for it. I just don't think that this is a thing that remains.
Yeah, I completely agree. I think the only use case that really makes sense for this is immutable art. If you wanted to create a piece of art that you never wanted to change and you wanted it to be inscribed in history at a certain date, at a certain time, at a certain place, and on a certain block because you really respected that blockchain and being an early inscriber on that blockchain. And that's really what's happening. If you were early on Bitcoin, then it's possible that 100 years from now, that becomes a very important and very valuable piece. Same thing is kind of happening across all chains. I don't know that it can be valuable across all chains though. So
no.
We'll see how it plays out. Okay, next up, Magic Eden introduces a cross-chain wallet. This is an NFT and crypto wallet for Bitcoin, Ethereum, Solana, and Polygon. And a really interesting move by Magic Eden at a time when the NFT marketplace war is really raging in the background. Blur just had their season 3 airdrop. We have OpenSea has been continuing to launch things, although we haven't talked about them for maybe a month now. And Magic Eden is not going anywhere, and they are really leaning in to the ways that they can solidify their product market fit. And one thing that they believe in is a multi-chain world. The CEO of Solana, Jack Liu, sort of highlighted their dedication to a multi-chain ecosystem. I think a lot of people think
CEO of Magic Eden, not Solana.
Did I say Solana? Sorry, of Magic Eden.
There's the CEO of Solana.
No, there's not. You're right. And so even though Magic Eden is on Solana was initially the Solana NFT marketplace, they have really been leaning in slowly. And we talked maybe about a month ago at Ape Fest in Hong Kong, Solana or Magic Eden announced that they are in partnership with Bored Ape Yacht Club launching an ETH marketplace. That hasn't come out yet. We don't have any further details on that yet, but you can sort of see the direction that Magic Eden is going. And here's what the CEO of Magic Eden said. He said, "We believe in a multi-chain world for NFTs. Up until today, for a user to really experience all the different products and features and have great content, you have to rely on every chain, and you have to download a wallet for every chain in order to purchase and interact with NFTs on every chain. Obviously, that's a user experience nightmare. And so this is a new wallet that aims to solve that. It's a self-custodial wallet. So you'll have full control of your assets. It's fully decentralized, just like we all love to see. And it really simplifies asset management, NFT management, by enabling direct cross-chain token swaps. So you can buy, if you had a lot of ETH, but you wanted to buy a Solana NFT right now, you can do that very simply within the wallet, which you can't do, as Kai said, the way he did it. Well, he didn't buy an NFT, but he bridged over to Solana. So being able to do that in a wallet is huge.
I think there's two big things from this. Like, one, we already have wallets that allow you to look at ETH, L2s, Polygon, Sol. I mean, Phantom, I just said, can do that, and you can cross there. Coinbase Wallet, you can do this. I think the key big innovation next is the ability to go from L1 to L1, which Phantom allows you to do it now for Ethereum and Solana, but that's it. They don't have Bitcoin, which the biggest source of liquidity is Bitcoin. And obviously with ordinals and that, there are NFTs and things going on there. And there isn't really ways to move Bitcoin over to ETH or Bitcoin over to Solana and vice versa, other than using a centralized exchange. Or Thorchain is the big one now. And so I don't know how Magic Eden's doing this, but I know some companies use Thorchain below it as like the underlying protocol to do it in a self-custodial, permissionless way. I don't know what Magic Eden's doing, so I got to learn more about how they're actually managing this, because using bridges is not a good idea. Using Thorchain, which is basically like, think of Uniswap, but instead of tokens on Ethereum, it's tokens from one blockchain to another, and they do it in a very secure way. If that's how they're doing this, and this is great. If they're not doing that, I'd be very wary. Phantom, for example, uses the way that you can do it is just through USDC. And they use USD Circles cross-chain, which is super secure. I don't know yet on Magic Eden, so just I want to put that out there. The other thing that I think is really important is we need wallets that are specific to NFTs. We don't do a good job of that right now. There are almost no wallets that do that. We have some features, but very limited. And like the example I like to give is, if you look at our Discord and our pro support channel, we give an NFT to people who sign up to pro, and oftentimes people are struggling to find it in their wallet. Because right now, you put it in your wallet, and the only way to see it is you got to go to OpenSea, and like it's usually hidden, so you got to like unhide it, and then you find it. And it's like, OpenSea has nothing to do. Why do we need to use this third-party app to find an NFT that you've minted from our site that then you're using to like connect in Discord or our like on-chain gift shop? OpenSea has nothing to do with that. It's just a marketplace. You can't even sell our ProPass NFTs. So like, why are we going to a marketplace to be able to view the NFT that we've given you? Well, because the wallets themselves don't allow you to see it. It actually makes zero sense. So right now, the industry is always sending people to OpenSea to view their NFTs. That's not how this industry is going to go. We will eventually just see it right in our wallets, but we just don't have any good wallets for that yet. And I'm hoping that that's what Magic Eden does. If they don't do that, this is a flop in my opinion, but we'll see.
Well, and you know what this reminds me of is, how many times have you signed up for a subscription for an app, and then like SoundCloud, for example, and then you go to change your subscription for the app, and they say in the app, oh, you signed up for this using your Apple ID. You have to manage this subscription through Apple, right? Well, that's very limiting right now, right? That's the Web 2 world, right? You get stuck in one way that you did something, and you have to continue to manage it through that. With Web3, we now have the potential where, because we're going to have NFTs for many different reasons, not just to collect a piece of art, which is mostly the use case that we're talking about right now. We're also going to have NFTs to manage our identity, to manage our real world assets, to manage so many things, to manage our tickets, maybe our event tickets, our concert tickets. And so there needs to be ways that you can easily view, sell, manage those. And that's exactly what Kyle's talking about, is we don't really have that yet. Magic Eden is really leaning into the collector use case and trying to help collectors of NFTs have a better experience with a better wallet, which, as you said, we really need. Next up, Cristiano Ronaldo is being sued for $1 billion. What's going on here, Kai?
This is ridiculous. So it's, I think, 3 Americans who are suing Cristiano Ronaldo for his advertisement of Binance back in, I think it was 2022. They started their agreement together. Cristiano Ronaldo launched like an NFT on Binance, and they've just like done a bit of promotions like on Twitter and stuff together. And so what happened here is 3 people, as a result of that ad, supposedly bought some crypto and lost crypto over the last 2 years. And so they are now suing for damages because they lost money. They're suing Cristiano Ronaldo for $1 billion. This is the most petty thing I've seen in my entire life. And I think what's hilarious about this is, one, actually, if they didn't sell, they haven't lost anything yet, but they must have sold, which means they sold the bottom, which means they're losers. But anyway, the real reason this is ridiculous is this is 3 Americans who, I mean, Cristiano Ronaldo is not American, okay? Binance is not an American company. And in fact, you're not even allowed to use Binance, which is what he was promoting. Binance, not Binance USA. These are different entities. He was promoting Binance, which Americans are not allowed to use. Now, you can use it if you like use VPNs and you work around it. And so these people, assuming they actually did use Binance, broke the law, I guess, or if this is even a law, but basically went around using an illegal exchange that they're not allowed to use, that is not an American company, and are now trying to sue someone who's not American, who advertises to non-Americans. And it's like, because they lost money, which is just, it's so ridiculous on so many levels and so annoying. And this will not go through. Cristiano Ronaldo will not pay these people $1 billion. It will get dropped. It may have to get settled, which is super annoying, but he'll pay a couple $100,000 or whatever to these 3 losers, and they'll make a bit of money because that's how the American system works, unfortunately. Hopefully it just gets dropped. I hope they make nothing from this, or I hope they spend a ton of money on lawyers and end up getting nothing from it, because it's just so annoying. And just the last thing we need, right? Like another big celebrity that gets involved in crypto and now has to deal with a lawsuit. Like Tom Brady, like everyone has had to go through this. It's just, it's right. Everyone. Now, some of them are shilling some bullshit. It hasn't really. I mean, he made an NFT that was kind of useless, but like whatever, his fans probably like it. I'm sure he promoted Binance, but there's nothing wrong with that. So it's
certainly not $1 billion in losses. Anyways, moving on. Next story. The Cosmos Hub is forking. This is a big story that not enough people are talking about. Kai, what's going on?
Yeah, so a bit of context here on Cosmos, first of all. So Cosmos is sort of the 3rd best ecosystem in the space. You have, in terms of smart contract platforms, you have Ethereum, and then you have Solana as kind of the runner-up now. And then I think in terms of at least the tech and the community, Cosmos has really done some pretty incredible things and has some really legitimate tech. A lot of the other ones are just sort of copycats of Ethereum that increase the block space. They're not really that innovative. When you go down to much smaller ones, sure, like Sui and Near, these are great technologies, but like they're very, very small. Cosmos, though, is there, it's legit. They have their own conferences already. They have like a lot going on. Now, one of the things that's happening here with Cosmos right now is they're sort of going through this like disagreement amongst the community. And what is going on is Cosmos has a token called Atom, and Atom has never really generated a lot of value, doesn't accrue a lot of value in the way that the Cosmos blockchain is set up, because Cosmos is a bunch of blockchains. It's basically like this technology that allows you to create your own blockchain very easily, and then you have your own token that secures that blockchain, but you don't have to do a lot of the tech stuff for it. It just sort of does it for you, which is great. It segments security, which I think is not a great thing, but ultimately, this token called Atom that is securing the like underlying base of Cosmos, it currently inflates at 20%, which, I mean, we all are well aware that a 20% inflation is really ridiculous. And so they basically what happened is their proposal that came out to move it down to just 10%, which is still pretty high. Solana's 7%, Ethereum is, I don't know, a couple percent. And so basically what happened was there was a vote and 41% voted in favor of changing the inflation from 20 down to 10 and 38.5 down to 10%, or sorry, and 38.5% voted to saying no. And then I think 20% just said, we don't care. So it was a small win. And so now technically they're supposed to do this. However, the ones that said no are like, hey, we don't agree with this. We're not down. So we're going to fork the chain. So what does that mean? It means right now, if you think of how this works, there's, I don't know how many validators there are that are securing this chain. And what these validators can do is just take that code, the existing code of Cosmos, and just copy paste it basically, and then go and secure that one instead. And if they get enough people securing that and the users go and use that, and everything goes over there, then they end up winning, right? And then the other one just sort of dies off into irrelevancy. Or if people are like, no, we want to stick with the one that already exists, and now no one goes and starts validating the new one, the forked one, then that thing just goes into relevancy. What's interesting though is this has happened multiple times in the two biggest assets, the two biggest blockchains in the ecosystem. Bitcoin, which was forked into Bitcoin Cash years and years and years ago because people thought we needed cheaper fees on Bitcoin, so that was better for payments. Well, who won that? Bitcoin. Obviously, Bitcoin Cash still exists, but it's basically irrelevant. And then the same thing happened with Ethereum. You have Ethereum Classic. This was from a DAO hack that happened, the first ever DAO. There was like 20% of the entire ETH supply that got hacked. And so they said, hey, let's just fork the chain. And there were some people that were like, okay, let's do it. We'll just forget about that whole DAO hack. A bunch of people were like, no, that's not how this works. So we're going to continue mining at this point the old Ethereum chain, which is now called Ethereum Classic. Ethereum won out there. Ethereum Classic still exists, but no one uses it. What's crazy though is what happens here is when you fork, you just duplicate the chain, which means every token that you had on that chain gets duplicated. And so you will have Atom on Cosmos, and then you'll duplicate the chain and you'll have double the amount of Atom. Now this will be called Atom. I think they're calling it Atom 1. Yeah, Atom 1. And look, and now it's a free market. So whatever happens, if a bunch of people go to the one chain and that thing starts working, that token will take off and the other one might fail and go down. They both might continue. Now you have two chains. Like you don't know what's going to happen here. But for an example, when the Ethereum Classic fork happened, you doubled your ETH and Ethereum Classic didn't die. And so you actually were able to then sell that on exchange back into your normal Ethereum if you made the right move. Some people went the opposite way and you made a lot of money from that. So that's what's potentially happening here with Cosmos, which is quite interesting to say the least.
And I think that there's also an important point to be made of just the power of being able to fork. This is not something that really exists in our society, in our business, in our politics, in any way. We don't have this concept of forking, but it's a very positive sum move. When you have a engaged community, that's the key here. It has to be an engaged community, and Cosmos is a very engaged community. They have very strong on-chain governance. You have a disagreement of basically 50-50, and this one's very close, 41% in favor, 38.5% against, very close. Then it often is the best to say, you know what, we're going to go our separate ways because we have different visions, and we're going to both continue to create and continue to build in accordance with our different visions.
See who wins.
And there's not, like, that's great. That is
free markets right there.
Free market at its finest. I love it.
Think about this. For underlying tech, this matters. For an app, you don't need this, which is where people end up confusing. They're like, oh, well, this is crypto. You need the ability to fork. You need it to be this and that. And it's like, no. Decentralized doesn't matter for everything. But for underlying tech, where there are a bunch of apps and a bunch of people and developers that rely on that underlying tech, the ability to fork is really important. So you think of where Web2 does allow this is like the App Store. That is an underlying tech that a lot of businesses and users rely on. And Apple could change whatever they want anytime. Right now, they take 30% of all revenue. They could change it to 90 tomorrow if they wanted to, or today if they want to. And there's nothing we can do about that. We can't fork it. But in open source technology, permissionless technology like blockchains, if that ever happened, because the community went whatever, you didn't like it, you can just fork it and everyone can move over. And I think that is just an incredible thing to have in tech. But in the Web2 world, you don't have that.
All right, let's keep moving along. Kai, Bankless, our good friends Ryan and David got into the limelight this past week for not really the reasons that you want to be in the limelight. They are still a great company that we really support, really believe in. Tell us what happened here.
Yeah, this is, you guys always hear us talk about and complain about the people on Twitter. This is exactly it, especially in the crypto world. So Bankless is a media company similar to us. They have podcast, newsletter, etc. We worked with them for many years on our agency side. And a couple of years ago, they had a DAO that launched from their community. So Bankless didn't do this. It was a decision by the community, and Bankless supported it. But basically, they launched a token, Bankless DAO token, and now they have their own business. It's a flourishing DAO. They have consulting, they have education, they have all these things. But it's called Bankless DAO. So that's similar branding, I guess. Ryan and David, the Bankless team they're part of it in the sense that they got tokens because it was their community that they launched this to. But they've never sold a token. They've never been in a proposal for Bankless DAO, et cetera. Like they sort of just helped bootstrap it. That was about it. But they've never made anything financially from it. Anyway, Bankless DAO, which is a common amongst DAOs and companies in crypto, have been going to L2 proposals for like retroactive funding and saying, hey, we want this amount of ARB token, for example, because we create content about ARB and this will help fund, the things that we're doing, good things that they're doing. And so this is very common. I mean, we did this with Lens Protocol. It's how we got our partnership with Lens, which has been very beneficial for our users, for us, for Lens, et cetera. It's very common. But what happened here is people took this the wrong way and said, oh, this is Bankless doing this. And like, well, Bankless already makes a ton of money because they create all this content and they run ads. And so they're making money from ads, and now they're going to L2s and asking for money from these proposals. And Ryan and Dave were like, this isn't us. This is Bankless DAO. It's a completely different company. They're like, well, don't you make money off Bankless DAO? Like, isn't this a thing that is your token and blah, blah, blah. And like, they basically are calling Bankless grifters, saying that they're taking money from L2s. They launched this token that went to zero. And so they rugged a bunch of people and they make all this money from sponsorships. And it's like, guys, they tried something innovative with the DAO. Sorry, the token went up way too much in the bull run and then went way down. It has nothing to do with them, first of all. So like, but it was very innovative. A lot of people learned from that on how to run DAOs, et cetera. And so that's an issue in itself, but not an issue of them. But just like complaining that they run ads is just insane. They have an option where if you want to go premium, you can, and then you don't have to listen to ads, right? But basically what people want is like, we don't want you to make any money whatsoever. We don't want you to run ads, and then we don't want to pay for your premium subscriptions either. We just want you to create content for free. And that's just insane. If that's what you want, that's what you keep fighting for on Twitter, you're going to lose. Like you're not, one, it's never going to happen. But if it did happen, no one's going to create content anymore. And now what do? Bankless has been one of the best resources throughout the entire bull market. Everyone else lost their minds in that bull mania and was like all in on Terra Luna. They were all in on FTX. They were all in on like all these stupid meme coins that all went to zero and blew up. Bankless was the one media company that said, hey, we have ethos and values and we stick to them. And they called out Terra Luna 3 weeks before it blew up. They called out Sam Bankman-Fried 1 week before FTX blew it up. They almost called all of the big scams that happened last cycle. And so I'm forever grateful for Bankless for helping me navigate last cycle, which is exactly why Web3 Academy exists today, is to help all you guys navigate this cycle. And so I don't know how people can complain about that. It's so frustrating. It makes no sense. I feel for them.
I love it when you get fired up, Kai. I love it. I think,
that too.
You nailed it. For some reason, people love to complain about creators making money, like as if all creators should just, I don't know, like who's paying us then? Who's going to fund creators? Creators need to make money somehow, and one of the best ways for creators to make money is to run ads and have partnerships. Like,
they're also complaining on Twitter. And where does Twitter make its money from?
Yeah.
Ads, you losers. So if you don't like ads, get off Twitter, and then you get off YouTube, get off all the places that they make content, because you're getting monetized, right? You are the product on those platforms. So if you really hate ads, you got to get off all social media.
Well, that is
live in the forest.
A great lead in to our next section. We have a new section of the show. We started this last week. It's called Agree, Disagree, Explain. So in this section, I'm going to read out a take from Twitter or from somewhere, from some creator, and then Kai and I will discuss. Kai will say whether he agrees, disagrees, or whether it needs to be explained. And the first one up here this week is very much in line with what we were just talking about. Elon Musk tells advertisers to go fuck themselves if they're going to try to blackmail him on his own platform. And this is exactly why Elon was the perfect person to buy Twitter. Kai, agree, disagree, or explain?
I completely agree. I don't know if any of you guys saw this video, but this was last night. It happened. So what's happening right now is bunch of people think that Elon is anti-Semitism for whatever reason. I don't know what he said. I didn't see this. But anyway, basically there's companies that are boycotting Twitter, Disney being one of the big ones. And so they are not putting any advertising dollars on Twitter anymore. And so they're basically threatening him with money. And Elon goes, "You're threatening me with money?" He's the richest guy in the world. He just basically said on live TV, "Go fuck yourself." And then he literally looked at the camera, put his fingers up there and said, "Go fuck yourself." It was incredible. And look, I mean, we need Twitter, right? We need this like digital town square where anyone can communicate and have free speech. And sure, there needs to be certain rules to that and things that like kind of help navigate it, because it can't just be a full-on shit show. But what it was before Elon was just no good. And so I think what he's doing is great. It sucks that companies continue to pull out. He's probably going to find new ways to monetize, I think, hopefully. Maybe we can get out of the whole sponsorship thing. I'm not sure, probably not, but their advertising, sorry, but we'll see where that goes. Either way, I just love that he stands up for what he believes in. And I think people will take this and spin it the wrong way. And I think ultimately he's trying to do the right thing for the world.
It connects back to the first story of what we said with a16z, which is the problem of the internet right now is that it's held by a couple of centralized companies. And even though Twitter is one of those big players, and yes, they do have a lot of control, Elon is definitely respecting the users and the creators. I mean, look what he's doing. He's the first one to ever pay creators for their contribution on a platform. And creators are making money now just for creating on X. And so, look, I think Elon sees that users and creators need more power, that we need to remove power from the hands of the big companies. And these big companies think they can go around and just say, you know what, we're going to boycott you, you're done. And Elon's like, no, like, come at me, boy.
I saw today that I guess a bunch of X users are now canceling their Disney Plus subscriptions. I don't know how that people would know that already. I don't think you can find that anywhere, but so we'll see if it's actually true. I hope it is.
Okay, next up, this one's from Barakovic. We all sent 300 million to Blast. We've actually all sent 615 million to Blast. So this number is much higher now, but the point still stands. They're currently staking our ETH. They'll earn around 1 million per month. By the time we can bridge back, that's a nice 2 to 3 million for them.
Yeah, I mean, it's very impressive. They're now the third largest L2 by TVL. So it's Arbitrum, Optimism, then Blast, and then Base. So it's bigger than Base, which is just insane. To call it even an L2 is probably not the right use of words yet. I don't know. If people want to do that and they want to be degens, then go for it, I guess. I have not bridged, and I don't plan to. The only thing I would maybe bridge is stablecoins, because I can't really get good, and I put this in quotations, risk-free yield with stablecoins, because Canadians can't get that on Coinbase, whereas they'll do that for you and you'll get the 5%, which is sick. And I can't really get that anywhere else. So like, and then you also are farming, but I'd rather not lose my money. Not that I think you will, just, you never.
I mean, you can't even take it out.
But I wouldn't anyway, right? Like I'm not selling that stuff for a few months. So like, why not make a bit 5% plus farmer airdrop? To make that 5% worse, that you'd need to put a lot of money in, and like, I'm not risking that much money. That's not me.
And it's just, I mean, I got to agree with this one, because it's genius by Pac-Man and the Blast 100%. Team. They've just gotten a whole bunch of liquidity, and now they can earn interest on that, which is literally free money for them.
Well, and think about, now they can go to developers and apps and be like, hey, come build on my L2, because we have $600 million there.
Yeah.
So the moment they go live, you have a bunch of users and a bunch of liquidity. There's no other L2 that did that. So it's genius.
Just to further on this one, I got one more tweet here on Blast. This is from Jared Watts. Blast is not an L2. The Blast smart contract, it accepts funds from users, and it stakes users' funds into protocols like Lido, or in the case of USDC or stablecoins, it stakes on, I believe it's through Maker. There's no testnet, no transactions, no bridge, no rollup, and no sending of transactions data to Ethereum. It's not an L2. Agree, disagree, explain.
Agree, but I don't think that there's anything wrong with that. It's fine. If people want to send the money, people can send the money. That's the whole idea of this space. It's permissionless. But you're right, it's not an L2 yet. Technically, Optimism is not an L2 because they don't have fraud proofs, if you're like in the technical aspects of it. So like, Blast is not an L2. Doesn't mean it's a bad thing.
Yeah, I got nothing to add.
It just means there's risk, but there's risk in everything we do.
Pretty obvious. Okay, last one. This is from Danny, and I'm going to explain. It's an image of a hypothetical. He says, watch ads to waive gas fees. And basically, it's an image that shows that gas fees are over $6. And then there's a button showing, as if this is in your MetaMask wallet, that you could watch 7 minutes of ads to waive the gas fees. And you could choose, do you want to watch the ads or do you want to pay the gas? Agree, disagree, explain.
Disagree. This is the stupidest idea I've ever heard. And I think this guy's living in 2020. There are no gas fees anymore. You move on L2. If you're worried about the fees, you live on L2s or Solana. If you don't care about fees, you live on ETH-L1. And so there's just no point in this. No one who's on ETH-L1 is ever going to watch an ad to save $6 unless you don't have money and you're on L1, but then you're in the wrong place, which means like go catch a cab and go to the next city because you don't belong there. And so this is stupid.
I do hope that advertising comes on chain though, because I love the idea of
it will. It's not for gas.
I agree. Gas fees are done. But the idea of having like fraud proof advertising where we actually know that there was proof of view,
right?
And then being able to pay out users for viewing and removing the middleman makes a ton of sense. So excited about that. That's a wrap, Kai. Thank you for another awesome episode. Thanks everybody for listening in. Don't forget, next Tuesday, 12 p.m. EST in our Discord is our Eyes on Chain event where we're going to give you our top 5 tips for the coming bull run. Also, starting next week, we've got an entire new show launching. We're still going to have our Doer Spotlight where we interview top leading founders in Web3. Then we're also now going to have a full-length Market Watch show dedicated to making sure you can stay on top of your investments. And then, of course, every Friday is the roll-up. That's a wrap. Thanks so much for joining in, everybody. Have yourselves an awesome weekend.
Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.